Hello, 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 hello,
Hello.
hello, hello. We'll wait for 1 more minute. Good evening, everyone. Today, we are going to discuss one of the important topics in income tax, TDS on foreign remittance, or we can see the international tax.
खत्म हो जाए तो बता दो। हेलो
We can see international tax. So let's see the rules of the today webinar. Please switch off your video and mute the audio. The duration of the webinar will be 40 minutes. To get the copy of the today presentation, please send the WhatsApp message at 900894408 with your name and email ID. Type your questions at comment and we will answer at the end of the session. So whatever questions you have, you can, this is an open forum. You are welcome to ask the questions and we will answer at the end of the session. Why international tax is so important? If you receive an invoice from foreign company for payment, so the questions will apply. What should be the withholding tax? Which treaty provision to be applied? What are the contradictory rulings? And whether this expense is going to be allowed or not going to be allowed. So all these questions are there. And so hence you have question, what should I do? Why TDS is there? Because tax as per the CBTP circular 152 dated 27 November 1974, tax to be collected at earliest point of time. Because government find no difficulty in collection of tax at the time of assessment, and this is avoid loss to revenue. And this also protect tax revenue and prevent tax evasion. So TDS is an easy tool to collect revenue. What are the objectives of Section 195? We will see in detail Section 195 because the objective is to ensure as best as possible that the tax liability on income element on the amount paid is got deducted at source itself so that department is not put to the hassles of recovering it from the non-resident whose connections with India may be transient or whose assets in India may not be sufficient to meet the tax liability. Because Section 185 deals with foreign to non-resident. So that is the reason the onus is on the deductor to pay to the government. This was also reiterated in the case of Vodafone International, where it by Supreme Court held that the object of Section 195 is to ensure that tax due from non-resident person is secured at the earliest point of time, so that there is no difficulty in collection of tax subsequently at the time of regular assessment. Why we are discussing Section 185? Why we are discussing Section 185? Because it has a consequence to all the parties, whether it is a deductor, it is a deductee, or the chartered accountant. And it has a scope expanded retrospectively also, extraterritorial operation also. Tax department eye on all international payments. I would like to inform you that all international payments are being monitored 100%, no doubt on that. 100% tax department is monitoring the international payments, and they will come to know in the case you are supposed to withhold tax and you have not done. And there is a controversy for emission produce. So we will discuss how to go further on that. So now let us see an overview of Section 185. What is Section 185 and how many parts it has? Section 185, you can see the 1, 2, 3, 4, 5, 6, 7, 8. It has 8 parts. Section 195, 1 deals with scope and conditions of applicability. 2 deals with application by the payer to the AO for lower or nil withholding tax. 3 deals by application by the payee to the AO for nil or withholding tax. 4 deals with validity of certificate issued by the AO for lower or nil withholding tax. 5 deals with the power of CBDT to issue notification rules. 6 deals with furnish the information relating to the payment of any sum. 7 deals with CBDT to specify class of persons or cases where application to AO is compulsory. And 8 deals with grossing of tax. So for international tax or TDS on foreign remittance, there is only one section we can't say that Section 195, which is the important section, and it has 8 parts. So we will now see one by one each part. I would like to inform you that this topic cannot be covered in one day. So we will see going forward in all there will be number of series. I request everyone to ping me message at 90089440082. I repeat 90089440082 with your name and email ID. You will get when the next series will be there with the timings so that you can have all the series of this international tax. Now we will read first section 195.1. Any person responsible for paying to a non-resident, not being a company, or to a foreign company, any interest, bracket, not being interest referred to in section 194 LB or section 194 LC or section 194 LD or any other sum chargeable under the provisions of the Act, not being the income chargeable under the head salaries, shall, at the time of credit of such income to the account of the payee or at the time of payment thereof, in cash or by issue of check or draft or by any other mode, deduct income tax thereon at the rates in force. Now we will analyze in the next slide. We will analyze this definition provided by the Income Tax Act. So it is saying any person responsible for paying. Now, who is any person? It can be individual, any individual, issuer, a company, a firm, a EOP, local authority, every artificial judicial person. So if anyone is paying to a non-resident, this section will trigger. If you are paying to a non-resident, I will give you an example. How you can pay to a non-resident. Citibank, HSBC Bank, these are foreign bank, correct? We never say this Indian bank, this is a foreign bank. So when you make any DD or you pay any bank charges or any commission to these banks, it is a payment to a non-resident, remember. Okay. Another example, there are a lot of properties are there, residential properties or commercial properties whose owner are not right now in India. They are non-resident. They have purchased the property and due to their work, they have moved out. And at present, they are not in India. And you are being deposited the rent into their Indian bank account. So that is also a payment to a non-resident. Another example, you want to watch any online movie in YouTube or any other app and you are making payment. Remind you that is also a payment to a non-resident. So there are a lot of instances I have explained you where it's not necessary that payment to non-resident should be made only in forex, that is dollar. It can made in rupees also, from your location also, and you are presuming that since he is an Indian citizen, okay, so there is no required to withhold tax, or you are making a payment to any app, or you are making to any online purchase. Remember, it all will trigger section 195. Now, payment made to non-resident include NRIs. So there is a question whether this will include resident but NOR. There is also another question will come. Whether this will include stateless persons deemed to be citizen, or whether it includes foreign company. I already explained you that this includes foreign company. Now, what are the unique features of Section 195 as compared to other TDS provisions? Unlike personal payments exempted in Section 194C, no exclusions for the same in Section 195. So there is no exclusion that 30,000 or 75,000 limit is there. There is no limit. Even though if you are making 5 rupee payment, this will trigger 195. Hence, all payments covered, excluding salaries provided, chargeability there. Example, payment to foreign architect for residence house construction, etc. Unlike threshold criteria specified in Section 194C, no basic limit in Section 195, even rupees 1 payment is covered. Unlike other provisions in Chapter 17, Section 195 uses a special phrase, chargeable to tax under the Act. So the moment any income which you are paying is chargeable to tax under the Act, TDS is applicable. So it is not chargeable to tax under the Act, TDS is not applicable, and this include all payers. And this have a multi-dimension as in involve understanding of double tax avoidance agreement, treaty, etc. So now going forward, we will see how to analyze further. And this payments covered, what kind of payments are covered, and include all kind of payments. There are some exclusions are there because because the exclusions are there because they are being covered in different section of Chapter 17. So that is why they have not dealt here. The moment some in foreign payments are kept specifically under different sections, so they are not covered under Section 195. Otherwise, this covered all payment, any other sum chargeable under the provision of the Act. So let's see what are the other sections where foreign payments are covered. 194E, payment to non-resident sportsperson or sports association. 194LB, income by way of interest from infrastructure debt fund. 194LBA, distributed income referred to in section 115 UA. 194LC, interest payable by specific company or business trust. 194LD, interest payable to FI or QFI, and section 195 other sums. 196A, income in respect of unit 2 non-resident. 196B, income from units. 196C, income from foreign currency bonds or share of Indian company. And 196D, income of foreign institutional investors from securities. I just would like to remind you that now from the current year, dividend is taxable in the hand of recipient and TDS to be deducted. So remember, when an Indian company is making dividend to their foreign shareholders, TDS to be deducted under section 195, and 195 rates are only being applicable. It may be 20%, it may be 10%, it may be 5%, depending upon the country and the DTA. There are few exemptions from TDS on which, if you're making this kind of foreign payment, you're not required to deduct TDS. Let us see what are they are. Shipping in the income under section 172, payment liable to equalization levy, capital gain earned by FII, and payment of interest by offshore banking unit to a non-resident or non-ordinary resident. Now, how to determine any sum chargeable to tax? Till time we have seen section 195. Now, in the section 195, what we say, any sum chargeable to tax is subject to TDS. Now, to determine that, we have to understand few more sections of income tax. What are the sections? Section 4, 5, 6, and 7 and 9. If you read this section 195, section 4, 5, 6, 7, 9, and section 90 and 91, you can have complete knowledge of international tax. So section 4 deals with charge of income tax. Section 5 deals with scope of total income. 6 deals with residential status. And 7 and 9 deals with deemed income. Section 4 Income tax shall be charged at the rates for the assessment year in accordance with the provision of the Income Tax Act 1961 in respect of total income of every person. And I've already, in my earlier slides, I've already explained you what is every person. Now, according to Section 5(2) of the Act, which states the total income of any previous year of a person who is non-resident includes all the income from whatever source derived, which is received or is deemed to be received in India or accrues or arise or deemed to accrue or arise to him in India during the previous year. Section 6 states about the residential status of the person. Non-residents are separately categorized in it, and Section 7 and 9 of the tax explain the term income deemed to be received and income deemed to accrue or arise in India. I request everyone to kindly refer all the sections, especially Section 9, okay, where you will come to know what kind of income are deemed to be accrue or arise in India. Now, we in this table, which you can see now, I have given you few nature of income, and in the middle column you can see the act, which section of the act you have to read, and also the respective article of the treaty. So suppose you are making any payment to USA, business income. So how to read? You have to read section 911 and also India US Treaty Article 5 and 7 and 14. In the case you are making any salary income, you have to read Income Tax Act section 912 and Article 15 of India USA Treaty. So this is the way you have to read and then compare which is more beneficial to the taxpayer, because section 9 provides the IT Act treaty read with MLI, whichever is beneficial prevails. So please have a look on that. You can take a screenshot of this also. So what are the sections you have to read based on the income, which is maybe business profession, capital gain, salary income, dividend income, interest income, royalty, or FTS means fees for technical services. So you can decide on that. Now, let us understand the business connection. Business connection not defined has been explained by the codes. Occasionally, activity is not covered. Any activity which is regular is considered as business connection. Income attributable only to operations carried out in India is deemed to accrue in India. Income due to activities of dependent agent are deemed to accrue in India. Income to the extent attributable to the operations carried out in India is deemed to accrue in India. Income due to activities of independent agent are not deemed to accrue in India. And significant economic presence, which is right now deferred. So in the case you have a SEP also, then you have a business connection. But it has been deferred by the Finance Act 2020 and new date will be announced. What is indirect transfer? Asset or capital asset, in the case being share or interest in a company or entity registered or incorporated outside India, shall be deemed to be situated in India. If the share or interest derived directly or indirectly, its value substantially from assets located in India. So if the base asset is in India, but you have a multiple layer of what we call holding company structure in different parts of the world, then even though you are transferring shares of over foreign company from one country to another, since the base asset is situated in India, the ultimately it would state as capital gain happen in India. This is the Vodafone case, which everybody know that. Salary is deemed to accrue in India if services are rendered in India, rates paid before and the services are deemed to accrue in India, and salary is paid by government to an Indian citizen for services outside India. Interest, royalty, or FTS. Interest, royalty, and FTS are deemed to accrue in India if these are paid to non-resident by government, Indian resident, unless it is for business carried on outside India or for earning income from a source outside India. Example, Indian resident has a branch outside India and interest is paid for that branch to a bank outside India. It is not considered accrued in India. Non-resident, if these are carrying on business in India or for earning income from a source in India. Example, for interest payment, if it is paid for carrying on business in India, then only it is deemed to accrue in India. Tax is deductible on some chargeable tax. This is the basis of determining whether the tax to be deducted or not. If the sum is not chargeable tax, then no TDS. Now, we will now open the forum for the discussion. Before opening the forum for the discussion, I request everyone to learn more international tax from our ebook. To get the copy of the ebook, you can send a WhatsApp message me at 90089448082. Please note down the number 90089448082 with your name and email ID. The cost is 500 only. You will provide an ebook that will complete guidance on what is active income, what is the passive income, what is business income, and with nature of payment, whether software services, contract payments, membership subscriptions, almost number of foreign payments are being discussed, so which help you to understand whether TDS is applicable or not applicable. Now, I request everyone to kindly what you called ask your question in the chat box so that I will unmute you and we can discuss your questions there in the open forum. In the case you have any questions, please flag it on the chat box. I'm waiting for you to understand. And again, I will request everyone to send me the WhatsApp message at this number, whatever you can see on the screen, so that whenever the next session on international tax will be there, I will update you on that. In the case you don't have any questions right now, you can send me the message at this number. In the case you have any query, I'll happy to answer your query in this number. Thank you, and have a great evening.